Pleasure.
Just wanted to start perhaps with a little bit of a top-line view on how you see the markets at the moment. Obviously, there's an absolute, I suppose, cacophony of voices trying to explain what's going on. How are you seeing things right now, just from, I suppose, a high level?
Okay, to put it very simply, we've seen a massive change that has created tremendous investor uncertainty, and that is simply central banks around the world ever since the GFC back in 2008 have been trying to keep the punch bowl full, pump liquidity in the system. They had the back of the markets. They watched asset prices closely. If asset prices started to fall, they came in to save the day. Even when they started tapering in 2013, the market didn't like it. They said, okay, we're stopping. Well, the game's changed tremendously now because we've got inflation and central banks are fighting inflation. They won't say this, but they probably want to see asset prices go lower. They want to see more pain in the equity markets and bond markets, and this will help them control inflation. So now investors are facing a new world where the central bank doesn't have their back and is created a lot of uncertainty. And so things like what's happening in China with their COVID control, that becomes amplified. We're seeing some demand destruction in some of the commodities, as you mentioned. And so that's pretty much what's bothering everybody right now. And that's showing up in the Aussie dollar. You've got the Aussie dollar chart there. The Australian dollar did quite well in the early days of inflation, and particularly after the Ukraine war. It was the best performing currency. But now that we're seeing commodities come down, I think copper's down over about 16% from the highs. We're even seeing oil, despite the supply concerns, that's coming down. So now we're worried about growth, and they're worried about the possible recession because the central banks will have to slam the brakes on too hard when it comes to fighting inflation. So if you look at the Aussie chart that I've got in front, if you have in front of you now, the Aussie dollar is trending lower, and that I use the short date moving averages. The 5, 10, and 20-day moving averages are aligned in a bearish formation, which means the 5 is below the 10 is below the 20, and they are all pointing lower. So for that trend to start coming into some question, we need a break back above the 10-day moving average at 70.58. That would suggest stalling momentum. And then if we break back above the 20-day moving average, which comes in at 71.80, that would suggest maybe there's a short-term bottom in place. And if you look at it, since this trend started, the 20-day moving average has held some pretty significant rallies. So that's a pretty important point that I'm looking at. And while it stays below there, I think the Aussie is vulnerable. So my trade recommendation would be to stay short, if you're short already, to remain that way. 10-day moving average, if it breaks that, there's a warning. 20-day moving average means to stop and have another look at it. If we look at the next Australian dollar chart, if you push that one up, we can see possible landing spots for the Aussie in this trend lower. So this is a monthly Aussie chart. The next level of decent support isn't found until the 50% retracement of the entire pandemic move. That's the low that we had at 55.10 to that high just above 80 cents at 80.07. That comes in at 67.58. So not too far from here, and that would be a fairly decent support level. If it was to break that, the 61.8 Fibonacci retracement of that same move comes in at 64.63. And I think that is a possibility that we may test these levels depending on a number of factors. But certainly if you see what was commodities continue to drift lower in this risk-off environment, that's the kind of levels I think we could be looking for. I don't think that we go much below those levels, however, but those could be some of the objectives.